Hey everybody, it's Will at VIP Mortgage. It's time for your local lender update. The inflation report we mentioned last week came in pretty close to expectations. It was not lower than we were expecting, which is what we're kind of watching for. But the numbers, when you drill into the report, looked better than the headline numbers, and that's good for mortgage rates. We have to keep in mind this is an old inflation report back from when the government was shut down toward the end of last year. We do have a bit of a data lag because of that. That being said, the inflation trend is holding steady. It's not rising, which is really what the Fed is watching out for. They don't want inflation to take off again if they do decide to cut rates further. And today we're seeing an interesting pattern on the bond market. The long and the short of it is the trading action has been doing these very small peaks and valleys, and we keep bumping our head on a certain line of resistance. We just barely crossed that resistance today. That's the best pricing that we saw earlier in January. We're back at that level and we're slightly better than it right now. If the market closes above that level, which is good for rates when the market closes a little higher, that would move us possibly into a new trading range. If we can break through that resistance and hold it for a day or two, there's actually a room for that next improvement that I've been talking about. It's not a giant improvement, but it is the direction that I thought things were going to head. I do still think we're going to stay in a relatively narrow trading range through the end of the first quarter, but we're taking a step in the direction the market has been trying to go since we started to get these overnight lending rate improvements from the Fed back in the fall. So this is interesting because typically Fed rate changes take 6 to 9 months to hit the market and actually show up in the rest of the economy. So when they started cutting rates in September, we're a little ahead of schedule if what we're seeing now is the effect of those rate cuts. Other economic data is looking pretty good. Job numbers continue to be weak. And we got some comments from Fed member Waller, and he's very skeptical that the stronger than expected job numbers from last month are actually legitimate. And he cites the fact that I've been pointing out for the last 2 or 3 years, every job number that comes in gets revised downward later. So all of that stacks up for this week being an interesting week. If we hold what we're seeing today in the bond market into tomorrow, there's a good chance that we could see a little bit more improvement from here. Of course, we could bounce off that resistance line and we could end up right where we've been for the past several months. If there's anything I can do for you, give me a call, 719-232-7553.